Truly, anything can happen in the market. And as we can see, the way the market is playing out, we can see that anything can happen in the market. And I keep on hammering it always that anything can happen in the market. And yesterday analysis, if we just go straight into it, and if you've been following my analysis from some times back now, you will understand. You understand where we are coming from and where we are currently. So, in the markets, we have this gap, opening gap on Monday, and we did have this one yesterday. But without wasting time, we just go to our something yesterday. This was our analysis yesterday. This happened to be our analysis yesterday. So, we were at this level. We picked this on 4 hour, picked the level on 4 hour because of this MSS that was being created. And this candle, this particular candle happens to be trading down, and we are heading towards this major flip. Yesterday I talked about if we didn't have that this breakage, then we cannot be rightfully selling. But when we come on lower time frame, we see a closure below this low. Then, even though we have this other block to the left side of the market, I didn't regard the other block anyway because of the fact that it was created yesterday. And at the same time, we did not have the instance. Then it was the other block that did take out this previous high. So it was a turtle soup. So attention won't be on it. But coming down to this particular level here, let's zoom in closely so that at least we'll be able to see. Coming to this level, we have this internal structure coming from 4 hour, but we have this candle and it's yet to close. So since we have this closure and this down movement, then our it was the reason why we picked the internal structure, and this level is supposed to be an area of struggle, which is going to send price even lower into the something. And this happens to be the trade that I gave yesterday. And I picked this level as my level of invalidation. And once I have this level of invalidation, I know that's okay. Market is not going. Then another level was open. That's okay. Price can react from this particular level here. So having selected this level, that's okay. If then same price trading above the something, taking out the liquidity, then I automatically know that we're going to have this this internal structure reclaimed. It will be reclaimed going forward. So that was the reason why I changed my direction in the markets. Change my direction, whenever I'm giving trade ideas like that, if you did not learn the whole full strategy, yeah, you will not know how to kind of play within the market. And I always tell you to risk wherever you can afford to lose in the market. So we have this internal structure being traded above, and I call this level. Whenever we have something like that, then we know there will be a retracement back into the something. Then having this level being invalidated comes to a reclaimed internal structure to be reclaimed, then we have this candle be created again. Pick the reclaim internal structure. I reverse my trade from here into the high. Then because we've traded above this level, then I pick this new something, a proportion block that was created into the highs. So that gives me double entry. Then I recover my losses here. And I was able to bank 1 to 5, which gives us 1 to 10 risk reward ratios. And I risk 1% of my accounts, and this automatically gives me. Then immediately after this closure of this trade, I close this one too. So I was able to make around 1 to 8 because I didn't wait. Seeing this particular leg here, giving us some kind of reaction because to be honest, I wasn't expecting this big move at all. Because coming from monthly with the way monthly is doing and looking at the current price in comparison to what dollar is doing. So I wasn't expecting higher prices yet because we can see from this month here, it was in June. It was June that we have this movement last. So from July, August, September, October, November, December, you can see that price was just ranging on monthly. So it gives us a lot of issues in the market. So we couldn't even move forward or go down. Then this morning coming to the market, I now discovered that we are reacting from this it was from this something that price ran into that give us this particular level here. So we can still be anticipating this internal structure that we have on monthly for price to go forward. And if you've been following me for a while, since I've done some analysis from this particular level since last year, May, that we are anticipating some price movements. Immediately we broke this high, we're anticipating some price movements above this particular level here. And having that level being taken, then automatically we know we move into the highs. So it was from this level going to weekly. As you can see, we pick this internal structure and we continue to trade into the highs, anticipating 1 to 5 return in the market. But coming to this particular leg here, I'll begin to see price through a lot of weeks, then more. That was the beginning of the struggle on what is this? This blue something. I didn't know what that was. That one. I don't know. I don't know what that means. Let me see if it is my essential. Okay. It's my essential sound. My light out. So okay. So we ran into this level and price began to struggle. And struggle for like 6 months. But now, thank God, New Year came and we picked this high. So I was just expecting some manipulation above this high, which is just taking the liquidity. But from what we have here now, it is obvious that price is willing to go up. It is very, very obvious that price is willing to go up. And if we close above this level, to remain just 2 days, 14 hours for this candle to close, then automatically we know that, come on, the analysis we made from this particular level into the highs, there is possibility to it. And this is the only area of struggle. Once this level is being broken out of the market, all these liquidity levels are not that strong again too. But since it is monthly, we can be expecting some kind of movement from those areas. Whew. So now let's move closely to the market and try to see what we can capitalize on today. Although we are swing trader, then we are still anticipating some kind of movement within price that we can on a daily something. So we've seen our open high low close. We can see obviously that price is willing to do what? To go into the highs. So another thing we'll be expecting. So are we advised since we've seen the trades and this particular leg here, we see what price is doing currently and everything, then automatically we know that's okay. Price is willing to. But from what we are having here now, okay, let's take out all our notations and let's start from daily because monthly we've checked what we have here. Weekly, okay, so if we have to look at monthly, this is the level. We'll be anticipating this particular level here can serve as our mitigation block. Then we have another level here, which is which happens to be our what is it called? Our internal structure head. So moving to weekly, let's try and see where we can area of something that we can be expecting some price movement from. So we have this other block, but we have this mitigation block. Whoever makes this mitigation block to give price chance to come down, if you check closely on monthly, then automatically, because this internal structure is still far away, but there is a proper mitigation of that internal structure, which serves as other block on weekly. I guess, on daily. Is there any proper mitigation? Let's try and check it for our. There is no proper mitigation of this internal structure. So basically, we can still be anticipating price to get below this level. But from what we have here, whatever make price to go below this leg here, it's and is making price obvious that okay, price is willing to do what? Come low. So it's willing to reverse. Having these two levels here, checking daily, something starts from this level. Let's use our structure since daily is our structural level. I mean, our structural time frame, then we can just pick that. So here happens to be our strong low where we are expecting price to protect on daily. And here happens to be our weak high where we are anticipating price to eventually take. So that's our structure. Weak high has been established with what price is doing on lower time frame. Then what we need to do next is to establish our what is it called? Our dealing range. And from the dealing range we have this internal structure. We have that internal structure, and below the internal structure we have these gaps and this fair value, this liquidity void is a liquidity void to this extent. But we have this internal structure there, which will lie as our. So the below the 50%, we might not be expecting or anticipating any movement below this low because this is the 50% of our daily range from daily. And price can just come to this level, then continue to move into the highs. Because we can see there is massive movement over the highs. And we come on weekly, I mean on 4 hour, we can see there is proper mitigation of this level. The imbalance created, the gap created there, the opening gap has been filled. It has been filled and properly mitigated. So we cannot, there is nothing much to expect below the 50% of this daily range. And another thing that is lying perfectly with our internal structure, I mean, with our mitigation block from monthly, is this internal structure of 4 hour. So if at all we're going to be taking any trades from this level, and here happens to be our massive something on 4 hour that we can be expecting price to get to. And looking at this internal structure, there is another thing on 4 hour here happens to be our weekly, I mean our strong low as well. So we are not expecting price to come below that low, except it want to take liquidity below it and use it into the high. But even at that, we are still not expecting price to come to that level to take the liquidity. Whatever makes it price to weak this leg, then we are not anticipating. We are not willing to buy to this weak high again. So now looking at 4 hour closely, this supposed to be our newly established strong low. And what do? We try and see where we can buy and sell for. As you can see, price, we have this level as our something then. We have this imbalance, that line, that fair value gap, 4 hour, line perfectly with within me with our 50% daily range. So whatever is happening from that level to this level here, I'm willing to buy on 4 hour from this particular level. Anyway, but I'm going to be very, very careful with with buying from this level. For whatever reason we go below this level, but we have this internal structure here. I mean, this internal structure is lined perfectly with our we can term this as our internal structure coming from daily anyway. This is an international structure coming from daily. There's a fair value gap of 4 hour. This internal structure is not strong enough to hold price because it's above it's a premium price and we will not be buying at the premium price. We're looking to buy below the 50% daily range. So then from this level, if at all we're going to be taking any trades from this 4 hour level, I'm willing to buy from this internal structure because it properly mitigates this level here, this mitigation block coming from monthly. So if at all we can be taking some trades from here, I guess the low of this place has been taken. Let's go to 15 minutes to try and see what we can capitalize on. So there is proper mitigation of all this level coming to this leg here. So if there is anything at all, I'm willing to buy from here. Because as you can see, there is closure of this something. So if at all, if I'm going to be buying for 4 hour, I'm going to be longing from this level here. So that would be my, that's too high in the market, but nonetheless, that's 4 hour trades. That's going to be a massive 4 hour trades in the market. So going to be going below this particular level here. Yeah, because anything can happen. So if at all, if we look closely, we've gotten some kind of movement and we've gotten a shift anyway. But with what price is doing here currently, you can be expecting some kind of movement from this level to the downside. You can use this particular leg to hedge out our what is it called in the market. You can use it to hedge out our movement, our trades. So that will give us 10,000. I want to use just 1%. And we have 20 pips. And that will give me 0.5. So, okay. So I'm trying to take some trades as well. 0.5, 0.1. From that level. Level 5. Going to sell. So markets 0.5. So so only to sell from that level going lower. So yes, I've done that. Then we can be anticipating some kind of movement from this level here. Be anticipating some kind of movement into the ice. So so with what market is doing, I guess we have to continue. I'm trying to see if my record is in place. Okay, so we are good. So I guess we have to be very, very careful and try to see clearly. And if we look closely with this level here, we have this fair value gap and this level, we can see price has really, really moved up in the market. So if we have such movement like that, what are we expecting and anticipating? I have to be very, very careful and diplomatic in taking our decisions. So with what we have, price has created a shift. Price has created another shift here. So, and that's one thing to be very, very careful of. That's major MSS in the market before we can determine to buy aggressively. That's something in the market. Even though I pick this trade on lower time frame, pick the trade on lower time frame with what we can see price is doing currently, and there is proper mitigation of all these levels going forward. As you can see, there is proper mitigation of all these levels moving forward. So there is no imbalance on lower time frame. Even though we can spot some imbalances on higher time frame from this level here, which line perfectly with the 50% of the something, there is no imbalance on lower time frame. So And that alone is something that we have to be very careful of. Let's assume this leg, this something, because looking closely, it is only logical for us to buy below this low, because that's where the mitigation block lies on on what is it called? Monthly. That's the mitigation block on monthly. And even though we are still expecting some higher prices, to buying from these levels that we have, the 50% of this something. So these levels might actually give us deeper retracements into this level here. Because there is another I mean there is what is it called here? There is another block here. We just see the mitigation of this leg going forward. So you have to be very, very careful with what we do. There is mitigation uh, of this level here. There is mitigation, there is proper mitigation of the level here going forward. So, and if we have the proper mitigation of the level moving forward, then I guess now what we're trying to do from this particular level on yesterday is what is actually happening here. So here it was supposed to happen from here yesterday, and all these legs are just uh what is it called in the market? So our manipulations in the market. So we have to be very, very careful with our dealings. So we have this level here on daily that we have not properly mitigated this particular mitigation block. So if at all, even if I'm going to be taking an interest, I'll be willing. I'm not willing to buy. I'll be trying to buy from this internal structure of daily, neglecting this 4 hour something, because the 4 hour block, there is proper mitigation of this leg to this eye. It's proper mitigation, and we've gotten a shift, we've even gotten a shift in the market. And that shift alone, wherever make this low to be close below with this 4 hour candle, then automatically we are looking for sell. We'll be looking for sell in the market. So here might be our TC, which would be our structure break on higher time frame. If you check through it on lower time frame, it's live perfectly. The low of Asian range has been taken. Then if we break below this low, then automatically we know that we are moving, we are going. I mean, price is tanking. We're going to be expecting lower prices in the market. This particular leg is supposed to give at least reaction to the market, and did give, but we created this other block, then it's continuing to send price lower in the market. So I guess 4 hour, then what would be the determinant of our trade is this, either the closure below this low. If it closes below this low, then we cannot be referencing the left side of this something. So there is one thing that I guess we can do, which is picking the internal, I mean, the low of this something, whatever makes this internal structure above here to be traded below and closed below, then this one might not actually hold price for us. So I guess we're just going to be waiting for price to come to this level. And if peradventure price take out this something, then we can be expecting and anticipating the fact that okay, we're going to something. So if at all, if we're going to be expecting extra and see, we have to be very, very, very careful and cautious. Today is Wednesday, so anything can happen in the markets. Anything can just happen. So we have to flow. The reason why I'm doing over analysis now is because of the fact that because of what happened yesterday, sending a price, I mean, sending a signal. And at the end of the day, there's no way you can just come back, upload another video and other stuff with the way price moved yesterday. So immediately I saw the flip, I just take the trace immediately without hesitation. So that's how I was able to bank that one today. So looking something okay before we can buy now, before we will be taking any buy in the market. there is proper mitigation of all this level going forward. And if I want to be buying, I really wish to buy from this level here, this particular level. So, but there is proper mitigation of this level, and this is the low. So if at all, I have two locations that I really wish to buy from. This is mitigation block of the something. It has been properly mitigated, but we have this low here. So if at all, if I'm going to be buying for 4 hour and want to be capitalizing on this leg here, I guess I'm going to buy this internal structure on daily. However, makes this internal structure on daily to be transcended, then automatically you can see it's likely 50% of the something. Then we can be anticipating price coming to this level here. Price comes to this level, but we have this leg here. So wherever this level here that we have here, even though I really wish to buy from this mitigation block, but I'll be going with this leg here. I'll be going with this leg. Here has been properly mitigated, and it's live perfectly with the 50% of this something close to this mitigation block. Then I'll be willing to buy from this internal structure on daily. I'll be neglecting 4 hour because there is proper mitigation of this leg. And the only place this leg is, I'm not expecting price to go below this particular leg here. So if for adventure price not go below there, then we can continue from this level here. So this trade is to hedge. This particular trade is to hedge the something, but this level I'm not expecting it to hold price any longer. So there is another block on 4 hour, but thankfully it's lying perfectly with something. So whatever make price to go below this low, what happened yesterday is still what is going to happen. If we close below this low, if price should be able to break this low, then automatically the price is heading toward the downside, then we flip. That means we're going to flip price to this side here. I'm just going to flip it and we go with whatever make price to close below this. So I guess that'll be all, at least for now. I've tried to give every possibility in the market. So that's what I say. I'm not buying from here, maybe only buying from this particular level. Yeah, so let's pick it. I'll buy a 4 hour buy is into that level and to this level here. These are strong low. So 58 pips. So that will give us profit times 5. Okay. So that will be anticipating 290 pips. 290 pips the market. So we'll be using this particular something to drive price into this level. So wherever make price to come in between this level, then we are good, I guess. So this trade is going to continue. I'll drop the video now so that at least we'll be able to quickly capitalize on it. Price is still within where we can enter from. So we're expecting price to get to this level. And as you can see, this is the breaker block here. And here happens to create a shift and price close below it. So wherever price is doing here now, we can be anticipating some kind of movement toward the downside. So I guess this is going to be our trade at least for today. And here, don't forget, here is just to hedge and try to bank on. No, I don't believe this level. There is proper mitigation of these levels going forward. And we just want to hedge out this level. And if for adventure we are taking out, then automatically we know that the upward movement of yesterday is not yet over. So I guess that will be all, at least for now. Then another thing I need to add is wherever make price to get to this level before we can buy, I'm going to be buying aggressively, but conservatively, I'm still going to be buying if price give me some nice movement within the something. Then we join. We have double entry from the level. But wherever make price to close below this low, then we're selling with the price as well. So That will be all, at least for now. Thank you. Have a lovely and a profitable day ahead. Bless us all. Amen.